as we say, education matters. Our co-host 3 weeks ago is running a maths class. Yes, so you can check out his page, and that's Senator Damian Crawford. Yeah, man. He's running maths tutorial. So young kids and stuff, and adults can check out his page and see exactly what is all right. So guys, just have a little patience with us. We are trying to read.
Okay. So I think I'm back now.
All right. Just echoing.
Okay, I think I'll be starting off with the earphone. I was trying to be all
right. How is the reception now?
How is the reception?
Yes, how is it now?
We are going now.
Wonderful, wonderful.
This is your introduction for tonight, sir. Agent Sasko said we're winning right now, and tonight we are looking at winning.
Well, I know your money, so we must be winning.
We must be winning.
Yes, we must be winning. From where I know your money matters.
Welcome, Sweet Believe. All right, welcome all protocols observed. Welcome everyone. Tonight, Agent Sasko said he wants to collect the trophy after I win. And we know that every single person on this live tonight, you already might know something about your bookkeeping, your record keeping, your accounting, your auditing, whatever. But we want to make sure when you leave this live in the next 30 minutes, you collect the trophy of good, proper record and accounting and auditing and all of those things. Your business, if you're an entrepreneur, and even if you're an individual collecting a paycheck, we want to make sure that you have a surplus at the end of each month and not a negative balance. So we want to make sure that's what we call the winning. So, Sean, I don't think you need much introduction, but just say what your accounting background is like, and then maybe just move into it.
So I've been a part of the accounting profession for the last 30 years. I have a qualification with that. Yeah, man, you're looking at me like that. Qualification where I have a first degree, first class honors too in accounting, and an MBA with as a finance specialist. I've been working as an accountant and as an auditor and a chief financial officer, as I said, for the last 30 years. So that is my profession. That is what I've been doing, and I've been practicing in that sphere for a number of years.
Well, guys, welcome. You hear the talent that's with us. So ask any question or share the live. Please share the live because we can't be selfish. Bobby Plug, welcome. Share the live, guys, because we can't afford to be selfish when it comes to accounting, bookkeeping, because a lot of persons start a business. They have all the cash, but guess what? It's not cash that necessarily run the business. You have to still manage the business, and you have to manage the business in taking stock of what you have, knowing when to buy, when to sell. You just have to know the whole thing, right? So, Sean, just tell us right now, why is it important to have a budget or a forecast for individual business and companies?
All right, a budget and a forecast is very important. Why? The reason it is so important is, especially for a business person, you want to decide where you want to go and where you need to end and where you're going to end up at the end of a particular period. So, for instance, you may say that you want to have sales of $10 million for the year. But if you're going to have sales for $10 million for the year, what type of expenses will be related for you to enable you, or will enable you to get that sales? And that is why the budget is important. Because when you have the budget, you sit and you analyze what is it that you need in order to gain the goals that you want. Okay, so if it is customer retention, if it's customer gathering, if it is sales, all of that can be outlined in the budget. To outline what you want to achieve in the budget. And that's why budgeting is extremely important. And the thing about it, for me, budgeting works marvelous because, especially in my small business, when I sit and make a budget, I make small budgets and incremental budgets for every 3 months and 6 months, and the related expenses and related it's not really expenses, but the related activities that is associated in what you want to achieve. And you outline those things and the money that needs to be expended for you to achieve those activities. And incredibly, most of the time, I exceed my budget based on the activities that we do. We exceed the budget because of what we outline and how we outline what we are going to do.
No, you exceed which one of the budget? The expense budget or the income one? Because if you exceed the expense, you're in problem.
Usually, both of them can be exceeded because, so for instance, if you make a budget for say $10 million and you're expecting to spend say $6 million, and at the end of the period you make a target of $50 million and spend $9 million, then that is a good exceeding expense budget. So you exceed the revenue as well as exceeding the expenses.
But at least you had a plan. You had a plan. You had a mark.
And the important thing is to have a plan, and so as to what you want to achieve. That is one of the most important. To have a plan and make a plan for what you want to achieve.
Guys, feel free to shoot your question. You have a professional persons here. Make sure, those of you, whether you're an individual, you're an entrepreneur, you run a small business, tonight is question night. You have the man in the chair. Robert is on, welcome again. So Sean, what I need you to distinguish is the difference between cash flow, because a lot of persons come here and you say, prepare a cash flow statement, and they say, what goes into it? What does it mean? How do I use it? So cash flow versus profit. Let's define it.
All right. First of all, let us define what is cash flow. Cash flow is all of the monies that you collected and set off against all of the money that you have spent. That is your cash flow. But profit is profit is defined by accounting is all of your revenue is set off against all of the related expenses. So here is the distinction between the two. In cash flow is actually money collected as against money spent.
Yes.
Money collected as against money spent. In accounting now, what you call profit, it may be paper money, meaning it can be your sales, which is your sales can be made up of two types of things. It can be cash sales, as well as it can be receivables. That means persons owe you, but it's still your sales and it still should be collected. However, it's not all sales that can be collected or all sales that will be connected. And sometimes you collect money, sometimes you collect sales before you actually make a sale. All right. So sometimes you collect cash flow before you actually make a sale. So therefore, it is sales is what you have sold to customers, but you don't necessarily collect the money. Your expenses also, on the other hand, is things that you should be spending, although you may not spend it as yet. And your sales or your revenue minus your expenses will give you your profit. Meanwhile, your cash collected as against your cash spent will give you your net cash flow.
All right.
And that's the definition of both.
Yeah. I hope that is clear. We have, as usual, we have persons joining from Sean's side. We have persons joining from Canada, Jamaica. Welcome. All right, Sean, what is important? Again, they come here on a daily basis and they want a loan from a bank or anything like that. And they say, go get some financials. Go bring me some income and expenditure statement. And the poor entrepreneur is like, what are you talking about? what does it mean again now for balance sheet? We're talking about what are expenses? What we call income?
Okay.
What
All right. So income is anything that we call a revenue that you will derive from, especially income may be in the form of sales, it may be in the form of a salary, it may be in the form of a commission, all of that, or it may be in the form of interest, especially for persons who are traders. When you make interest or profit on the trade, that will be regarded as a revenue. All right, so that is your revenue. Either it's come from the sales, come from a salary, come from commission paid to you, coming from interest in trading. That is what is called your revenue. Your expenses, on the other hand, is amount of money or what you have spent in order to garner this revenue. So, for instance, if you're in a trading business, so you have the sales, so your expenses would first order of expense would be your cost of sales. What is the money that you spend to buy the goods in order to sell it? Then you add all other operating expenses such as your transportation, your salaries if you have any staff, your electricity bill, your water bill, and also most importantly your phone bill and internet bill, because we know your Money Matters. Internet is very important for our transmission of what we are doing, especially now. Yeah, and it has to be paid. So your expenses are usually things that needs to be paid. Meanwhile, your revenue is usually money that it should be collected. That is putting it in a simple form.
In a simple form. So we also have what we call surplus, and persons trying to figure out who have surplus.
All right. So we usually use surplus in a non-for-profit scenario. So when you have a business that is not for profit, they don't want to try to call it profit, so they call it surplus. However, that is essentially it is money is collected minus money is paid out. So it's money is collected or revenue minus your expenses. So money is collected minus your money is paid out. And what is left is called your surplus, or the correct name for it would be your profit. What is left is called your profit.
Okay. So typically, I am an employed individual, and I really have a surplus, so to speak, when my income that I collect is more than the expense that I have. But we know that's not how it goes in reality.
Right. So yeah, man. So you're speaking of surplus. I prefer to do the correction, man. It's profit. Profit is good. Don't dare to call it other thing than profit. Profit is always good. Profit is good. The reason why profit is profit is good, and profit is very important. Profit is important because you need profit in order to reinvest in the business, in order to reward the entrepreneur. So profit rewards the entrepreneur as well as for his hard work that he puts in, as well as you need profit in order to reinvest in the business for the business to grow. So profit is always good.
All right. You see, one of the things that I want to mention for individuals. Welcome everyone. Javedan, welcome. One of the things I want to point out, this is Sean, is that once that individual create that budget or that plan, it will actually allow them also to manage their affairs. So it's not just about the business person that we are looking at when it comes to accounting, right? And budgeting and record keeping, because one of the things about good record keeping and bookkeeping is that it allows the business to look quickly at what they are doing.
And that is important. And that is important because and what you're saying about bookkeeping and accounting and keeping of records, that is the reason why you then what happens with doing that is your budget now becomes alive. Your budget becomes alive because whatever you have budgeted for a month, that is your plan. Or when you record what is actually happening, that is your actual. And what you need to do is to compare your budget with your actual to see if you're actually achieving what you set out to do. And with that feedback, that is why the budget is active. And now it becomes a situation where you know what is it that you're achieving, how is it that you're achieving it or not achieving it, and what you need to tweak in order to achieve what is it that you're planning to do. So that's why the actual versus the budget is very important, and the record keeping enables you to do that.
Well, Sean, I want to take a second and welcome Richie D. Burgess of the Edge 105, and he runs a liquor store, and he have to budget to know what price to price his liquor at. I'm telling you, he must be track of what he as a matter
in order to make that great profit that he's making.
Yes. So we welcome Richard D to Money Matters Monday as we look at bookkeeping, record keeping, accounting, auditing. You name the things that will assist the entrepreneur to manage the financial side of the business. And there is nothing like proper record keeping, because
very important, extremely important.
Yes, my understanding of bookkeeping, it's pretty basic. You can just use an exercise book and just record your sales and your purchases. And that is actually just bookkeeping. And then you can get somebody to assist you with your accounting and your auditing. But if you're a small business, yes, sir, you're welcome. If you're a small business, you don't need an elaborate accounting software. Is there any free one out there, Sean? Is there any free thing out there that businesses can use?
There are many things out there that business can use. But as you explained, the bookkeeping is just a simple scenario of those recording your sales on a daily basis and recording what you have spent. And it don't have to be elaborate. It's just something that, as I said, you just painstakingly take 10 to 15 minutes out of your day just to jot the information down. And that will serve you a long way in achieving what you need to achieve in record keeping. So that's the basic. Other from the basic, you can go ahead now and you can set up a particular tracking or keeping the records in Excel, Microsoft Excel, and we can move on up to a proper accounting system where you may have the QuickBooks. QuickBooks is a nice accounting system, very, very easy to use, very user-friendly for the entrepreneur and for the small business person.
Is that free? Is that free?
QuickBooks, we're in Jamaica, so software is always technically free, but it costs for QuickBooks. You can have QuickBooks online, or you can purchase the actual software. You can purchase the actual software. It's relatively inexpensive when you think about the value that it gives, that you get from it. So it's relatively inexpensive, but there is some amount of capital or expense or capital outlay in regards to the QuickBooks. However, if you're looking at things that are more affordable, you have accounting programs such as Wave Accounting, which is a free program and it is online. So for the entrepreneur that is flexible, you can operate from anywhere in the world, issue your invoices and any receipts and etc. that you have. You can also download it onto the Wave. It's an online program and it is very good.
Sean, is it safe? Because although we have entrepreneurs excited tonight about getting their books in order and their record keeping, and yes, we hear that there's a free thing. Is it safe?
I've been using Wave for the last 8 years. Yeah, man. I've been using it for quite a while. It is relatively safe. But along with the safety of the records, you have to also know your personal safety. So what I usually do in order for me not to lose any records, or in any accounting system, what you have, I usually have a backup. Usually try to back up the information and print off the data. For Waves, I usually print off the data on a regular basis and store it, and so that therefore any information that I need, if the accounting system crashes or if I don't have an online access, I can still access the records that I need. So we have been using it for a little while, and it has proved well for me, as well as the clients who are recommended to.
So you're recommending like once a month, once every 2 months, once every 3 months, they do this backup or after?
Yeah, man. Well, as a matter of fact, you know, the accounting as an auditor, the backup should be done every day. Backup should be done every single day. Yes, you look at me. A backup, yes, man, every day. A backup, that is what is recommended. You should do a backup of your accounting system every single day, because there's every single day you put on new records. However, it may be onerous, and therefore you want to do it. You want to do it as frequently as you can. But the ideal thing is for you to back up your accounting records and back up your online records, etc. every single day.
Well, guys, we said money never sleep and money matters, and that is why you have to back up every day, because every day money running through your business.
Every day money running through your accounting.
Every day money running through your business. And what Sean is saying,
that happens. And remember, you know, although we use computers, etc., we have been using it for a while. Remember that it is unstable. No matter what software you're using, it is unstable, and something may happen. May crash your computer, and if you lose records for 6 months, yeah, virus, any type of thing may happen. Glitches in the program, and information, and then you can be back on track and on again to doing what you know what matters, and that is making the money. That is important.
Making the money.
Making the money, that is what matters.
Well, Sean is using his expertise as an auditor to say, it's not just accounting, you know, but as the auditor, you really should be backing up your business account in record on a daily basis.
On a daily basis. Some means. That is what, yeah, man, by some means.
You know, one of the things that we... Go ahead, Sean.
Yeah, man, I'm just saying by some means, by any means, maybe on a thumb drive, you maybe email the backup to yourself, or both. Just put it on a thumb drive and email it to yourself as well. So it is recommended that you try and back up on a daily basis. That is what we usually recommend. I usually recommend when I was an auditor, and this is what I recommend to everybody now. All right.
Okay.
As I say, it might be onerous, but try to do it as ASAP, as soon as possible. It is even weekly or a monthly basis, but ensure that you back up. But the recommended is a daily basis, not just to ensure that you don't lose records.
We have 5 minutes to go. Shoot your questions. You have Sean, MBA, BBA, accounting auditor in the accounting profession. Shoot your questions. Very interesting. Marcy B, welcome. Right? Chromaston, welcome. All right. Welcome to everybody. Welcome to everybody. Welcome. All right. Sean, one of the things that I want to look at is what benefits there are for individuals now to be saving, or the threshold, to manage the threshold to get better returns if they invest that money for pension and stuff like that. Because
okay, you're thinking about taxation policy now.
Definitely. Okay. We have to touch that. We have to touch that.
So taxation, remember the law says, you know, that every money that is earned is taxable. That means every single cent that you receive from any source is taxable, except. So we can go on into the exceptions, but you know the essential thing is that every single money that you get, it could be it's not a loan, but it could be money that is given to you as a gift. It is taxable. All right. So therefore, what happens is that now our system in Jamaica is I think it is relatively easy to understand. Essentially, any money that you receive is taxable, except certain expenses they may be taken out of that money. And what is also happening for on a personal level, you have what is called a tax threshold. That money is between, for instance, for all the revenue received up to $6 million, it is taxable at 25%. Up to $6 million, it's taxable at 25% after you take out the threshold, which is 1.5 million. So 1.5 million is the threshold. Anything over 1.5 million and below 6 million is taxable at 25%. That's your income tax rate. Then anything over $6 million is taxable at 30%. So that is for an individual. So therefore, I just say everything is taxable except. Now, if you have any pension, any approved pension by the government, any money that you spend on for the pension, that amount is non-taxable. And the list goes on as to various expenses that may be offset against revenue in order for the government to say, okay, then this is the amount that is due in taxes. Now, the system is fairly simple in the Jamaican sphere. The forms may be complicated, but the system is simple. And once you are able to ask the tax department, tax administration, for your password to go onto the threshold, onto the tax portal, it outlines it, the forms outlines it for you specifically as to what to do.
All right, Sean, one of our Insta fam is asking about access to credit, right?
Yes.
Now, what is interesting about access to credit is that if you don't have proper record keeping in the first place, you can't get credit.
You can't get credit. And what is on with the banks nowadays is, first of all, you have to have your proper record keeping and you have to be tax compliant. Most of the banks are asking entrepreneurs to be tax compliant. And the first thing is that the first thing to be tax compliant is you have to have proper records. Because that is what the government needs to see in order to make you become tax compliant. So you don't have to be making profit, you know. To be tax compliant, you don't have to pay a cent in taxes. However, you need to show to the tax administration that, okay, these are the records that I have, and they are proper records keeping. I've been keeping my proper books, and therefore, when they assess you, they can say, okay, then no, you do not have to pay any taxes, and therefore you are tax compliant. All financial institutions are asking for your tax compliance, especially tax compliance certificate, in order to issue any credit at this point in time.
Okay, so the truth is, if you don't have keeping records, good records for argument's sake, your access to finance is limited right here and then. So
extremely limited. Extremely limited.
So individuals, if you're doing your own thing, entrepreneurs, small business, if you want to access finance in an institution, you must be keeping good records. Must. You heard it on Money Matters Monday from the expert, Sean Harris himself, right? Another borrowing access. Hold on. Access to funding. Well, all right. So we are trying to make sure that no one is left out of this. We actually out of our time. Yes, we actually out of our time. I don't know if there's any particular thing, Sean, that you want to wrap up on, but one thing that we have to look at as we spoke about access to credit, and I want to touch on something I mentioned earlier. Access to credit, entrepreneurs, businesses borrowing from microfinance companies might find themselves paying now soon to come, because the bill was passed in the upper and lower house just last week, Wednesday and Friday.
Yes, microfinance. Yes.
Right? And it is there, it is here. Now we have to embrace it and we have to see how it's going to go. But one thing we know for sure, when things go through regulation, it becomes there's a cost structure that somebody has to pay.
Always, somebody has to pay.
Somebody has to pay. That's all I'm saying. Somebody has to pay. Kevin Fashion, do you teach ACCA? Well, that's for you, Sean. Do you teach ACCA?
Yeah, man. Currently I'm doing no. I've taught at UCC, at the University College of the Caribbean, University of Technology, Jamaica, and also Portmore Community College for the last last 20 years in accounting and corporate finance, anything that has to do with money, risk management, all of that. Anything that has to do with money, I've taught there. I've also for a person in Portmore Community College, person who are doing the ACCA level 1, I've taught them as well. But currently, I'm not doing any tertiary level teaching at all at this point in time. I'm a little too busy with Jamaica lectures.
Yes, his business has taken away that time and he's a devoted lecturer. So we don't do things half an hour or half an hour.
No, we can't do it half an hour. The students look up to you, so you have to make sure that the time is, you have the dedicated time in order to assist them in whatever they need. And to split the time it's just not congruent. It just was not working. So I will leave that for somebody who have the time to do it.
Yes. Timing. Well, Sean, the biggest takeaway that I have for tonight is that you have free software out there to do your accounting for you. So your record keeping should be up to date. It named Waves. Right?
Yeah, man. Waves one that I recommend and I've used for the last 8 years.
Well, if Sean uses that and his business is very successful, you can too. Tonight, Sean, I'm leaving you with the final takeaway. So take us out with any advice that you have for the record keeping accounting is very important for you to know where you want to go and what you want to achieve. And if you know your money matters, your record keeping matters. Thank you, Sean. Guys, thanks for joining. Tune in next week, Monday night, for another in our Money Matters Monday live series. Thank you all for joining. You can still shoot your questions. They will be answered. All right.
Listen.
All right.